Welcome to today's Morning Report on Wednesday the 15th of June with me, Richard Barron, market analyst at Antic Markets. We've got a positive start to the European session. This is a first, certainly in the last week or so anyway, where the market's been pretty much solidly down consistently every day. The turnaround has really not been driven by great deal. You had positive retail sales out of the US yesterday afternoon, and there was a slight turnaround in the Treasury yields, which is interesting because they have been falling consistently in the past couple of weeks or so. But these rebounds in Treasury yields are sort of reflective of this slight improvement in risk appetite that we're seeing across the board. You're seeing across forex markets risk being taken on more. The safe haven plays are unwinding. You've seen the yen weaker, you're seeing the Swissy weaker, and you're seeing commodity currencies high, you're seeing cable higher. Now, obviously, Brexit is a massive issue at the moment. Not really anything substantial to go on behind why cable is sort of 50 ticks higher, but obviously it has been significantly weaker, and I'll talk about the technicals on that in a bit. But we've got the Fed tonight, and what we are seeing is this, or what we're expecting is that the Fed will not be moving on interest rates at all. But we need to obviously just be aware of the fact that we have the FOMC projections, so changes on the dot plots, on the inflation expectations, on growth, and also Yellen's press conference as well. So lots which could drive the dollar today, and lots to drive risk appetite. So if the dollar takes on more of a dovish tone, reducing the dot plots perhaps, or sort of moving less positive on inflation or growth, then you could see the dollar weakening again, because that would mean that the market would be pushing out expectations of a rate hike. So lots to drive markets at the moment, but I think Brexit remains the big issue of the day, despite the fact that we have got this Fed meeting tonight. But not only that, you've got a whole load of other economic data ahead of the Fed. So let's just get that up. First of all, UK unemployment 9:30, expected to stay at 5.1%. That's fine. That's been like that for a while. 2.1% on the expectations of average weekly earnings growth ex bonus. So again in line with last month. So nothing too significant expected out of that data. But then into the afternoon, we've got the US data. We've got New York Fed manufacturing data, which is expected to come in at -4.0. So it's again negative, and that comes ahead of the industrial production, which is expected to come in at -0.2% for the month, which is basically just holding on to the sort of negativity that we've still got on the year-on-year data, which is around about 1.7% on the year. And we've also got the capacity utilisation, which ticked higher last month to 75.4, but is expected to dip back a little bit to 75.2 this time out. And finally, we've got the EIA oil inventories, which is the weekly report that is expected to have another drawdown of 2.4 million barrels, 2.4 million barrels on the week. So that would theoretically be supportive of the oil price. So lots going on this afternoon in front of the Fed, but obviously the Fed is still the main issue of the day, apart from Brexit, which obviously we can't predict when the polls are going to come out, and when the opinion polls come out and which way they're going to do. So it's very difficult to trade Brexit at the moment, but obviously lots of volatility still. Now, my chart of the day is Euro Yen. And we've had the obviously the market flight into safety, safe havens, and the yen is the big safe haven play. But is this now on the brink of turnaround? If I zoom out, you can see that 30 on the RSI has been a consistent, interesting turning point, or certainly was September, November last year, although the sell-off in January got lower. But when it does turn around, it does certainly seem to sort of induce a bit of support. So the question being, is this a point at which we're going to see some support coming in? Very early days, because you've still got the MACD lines falling, stochastics in negative configuration. And we've had 6 negative candles in a row accelerating, but this first sort of blip on that run could well be a turnaround. Now, here's the hourly chart. The acceleration has sort of continued in the last few days, where you see lower highs, lower lows. But is this a turnaround, a near-term turnaround? You've got a bull divergence or a positive divergence on the MACD lines on the hourly, and the hourly MACD lines and the RSI, and the stochastics are pulling a bit higher as well. So is this an interesting sort of point to get sort of the prospect of a recovery? Well, it is a risky one. Obviously, the market is still strongly against the euro on euro yen. And it certainly seems as though we've got the support that has held at 1847 overnight, and an initial move higher, pushed through a little bit of a pivot band, which was around that sort of 119 figure, 119.20 area. So that could become a bit of support. So if you see it holding on to support around 19 figure and then pulling higher, could that be the beginning of a recovery? Well, you're trading above this. If you can trade above this 55-hour moving average, that would again be another signal, perhaps. See if we can get what sort of downtrend we get. There is a downtrend, and it's hit it bang on and come off. So you'd need to break that downtrend as well. But the main resistance on this, above 119.60, which is a minor pivot with reaction lows, minor pivot, is 120.33, which again was a support and became resistance. So that is your main line of resistance near term. That's the point at which you'd need to rally through really to start seeing a bit of traction in a recovery. Until you see that, I don't really think that you can get too excited about a recovery, but certainly at the moment there is this sort of downtrend being tested, although it's just backed away from it again. If you see the hourly RSI maybe pushing above 60, again that would be a signal potentially. Hourly MACD lines pushing above neutral. So these are all things that would be early warning signs of a potential turnaround in sentiment. And it's interesting because the yen has been so strong, but again it is having a bit of an off day, and it could be the beginning of a bit of a recovery on against the yen. So I wish you good luck in your trading on euro yen today, and obviously the Fed being a large volatility event, and I will speak to you later. Thank you.